What's up, YouTube? I'm Adam Odell, Chief Investment Strategist of moneyandmarkets.com, and I'm joined by my research analyst, Matt Clark. We're here for another episode of Ask Adam Anything. From what I understand from Matt, we have a pretty busy week this week with several questions, many on the topic of Coinbase and Bitcoin and Bitcoin's predecessor, some would say gold. So we certainly got a lot of interesting feedback from the Coinbase video I did a week or two ago, as well as two articles I've written on moneyandmarkets.com. So we'll talk about all that today. And Matt, I'll let you walk through the series of questions for us.
Absolutely. It is a lot to get through, but I do want to remind everyone that if you do have a question you'd like me to ask Adam, we would love to do it. I would love to do it. And it can be as far reaching as you'd like. In fact, the farther reaching, the better for me, because if I can put him in an awkward position, I'll do it. I'm okay with that. But you can do so by emailing me at feedback@moneymarkets.com. We'll put the email address down below here. But yeah, a lot to get to. And a lot of it all really surrounds the video that you did on Coinbase and some of the subsequent material that you've done on Coinbase relating to its IPO that came out a couple of weeks ago to big news. Now, the first one comes from YouTube. It says, "Hi, Adam. Thanks for taking questions. Now, if you had physical gold or silver coins to sell, how would you go about doing that, selling it without getting ripped off?" I thought that was it's not necessarily Coinbase related, but it kind of leads into a broader discussion. So I want to start with that. That came from our YouTube channel.
Sure. I think I actually saw that another user answered back and say that you will get ripped off. Everybody but the seller of the gold, or the seller of the gold, and the buyer of the silver and gold will get ripped off. But in that situation, my answer on this one is very simple. I wouldn't sell it if it were me. I can't tell you what to do with your money. This is not individualized investment advice, but I'm bullish on precious metals. I have been for the past 18 to 24 months or so. And I think we got a bullish breakout of a multi-year bottom in gold and silver and even platinum. And I think we've gotten a pullback more recently over the last 5 to 6 months that has people looking in other directions, cough Bitcoin. But I am long-term bullish on precious metals, gold and silver. So I wouldn't sell it at this point, no matter where you're trying to offload it.
And I'll make note that all three of us, Adam Odell, Grins on Fortune's co-editor Charles Sizemore, myself, all very bullish on precious metals. So just to kind of put that out there in perspective. Now, next one, and this is pretty rapid fire, so I apologize for that. But Scott on YouTube had mentioned that as of close of a particular day in the market, the ARK funds. There's been a lot of talk about the ARK, the relative to the ARK ETFs, but 3 of the ARK funds had actually invested in Coinbase. You've got ARK-K, ARK-W, and ARK-F. And the total ARK Coinbase position was about $750 million. And that they are, we're not talking about retail investors or new investors. And he said it was something to think about. And it is, especially since you had mentioned, about that in your video about Coinbase. But I kind of want you to comment on what Scott had to say and kind of bringing up that ARK discussion.
Sure. Well, I mean, just to be clear, I think Coinbase is likely to attract both retail and institutional order flow. Certainly, retail is reading the headlines and has maybe an element of FOMO, but institutional investors are looking for a listed way and an on-exchange way to invest in the Bitcoin and the blockchain and the revolution in that sense. So as far as Cathie Wood, the CIO and the founder of ARK Invest, you think about her mandate or her brand is innovation. So how can she not invest in Coinbase, which is the first exchange listed, exchange for cryptocurrency? So I feel like, it would probably be a bigger story if she had not invested rather than the story that she did invest in. So she certainly has a ton of AUM that she needs to put to work. She believes in Coinbase either as a first mover or as one of many. I don't know. I haven't heard her position on Coinbase specifically, but as I said, it'd be kind of more of an interesting story if she didn't invest in Coinbase as I see it. And she's not the only institutional investor I expect to get into the shares. So certainly an interesting observation, but it doesn't necessarily change my opinion.
Very good. And then another YouTube watcher had actually mentioned that they actually bought 2 shares and placed a $295 limit order as a joke, figuring that he would never get it. And he goes on to say it was the first time he's watched the channel and he has subscribed, and he thought our conversation was very intelligent. So, it's kind of something to point out that, people are watching and they are taking what you say seriously. As they should.
Appreciate that. I mean, the limit order that you put in as a joke and forget about it, that's the best buy. I've done those on more than a few things. You put it so far below the market and you think, oh, this will never get hit. I'll just put a good to canceled limit order, 30-40% below the market, and lo and behold, it gets filled one day, and you think, what's going on here? But it's actually a good strategy. I mean, this person bought below the market. I think that shares started trading at like $381, and so to be able to buy on limit at $295 is already a pretty nice discount. So I actually wrote about this type of technique at moneymarkets.com. I'm sure we'll be able to link to these 2 articles. It was a 2-part series on how to buy Coinbase. And there are a few, there's a premise that I started with, and the premise was that you have to buy Coinbase. Maybe you're the type of person that just is into the crypto markets, or you have to buy every hot new IPO. You don't want to feel like you missed out on Google, like your rich uncle did, that type of thing. So the premise is you want to buy Coinbase, but do you buy it on day one, or do you wait some length of time down the road and buy it at a different price? And I used kind of a strategy called a bracket strategy. And basically the idea was you'll create a rule for yourself that you say, I will buy Coinbase if the shares of Coinbase fall 50% from their IPO or their direct listing price, 381. Or if I don't get that opportunity to buy at a 50% discount, I will buy at a 50% premium if shares just go higher and higher and higher, because I don't want to miss out on that gravy train if it goes higher. So something like, I think DocuSign had an IPO that never dipped below a percent or two. So if you didn't get in in the first week or two of DocuSign, that you missed that train if you were always waiting for a pullback. So that was the idea behind my 2-part written series on how to buy Coinbase. You can check it out at moneymarkets.com. So the analysis, that there's kind of some magic math involved here. If you buy at a 50% discount, and then the stock goes on 10 or 15 or 20 years later to be, a 10 or 100 bagger, buying at that 50% discount is going to double your return relative to if you had bought on day one. Whereas if you end up having to buy at a 50% premium, meaning the stock just goes higher and you say, I'm going to get in because I don't want to miss out on this train, buying at a 50% premium will only create a 30% reduction in your total overall gains over a multi-year period. So if you get the chance to buy at a 50% discount, you double your returns. And if you don't get that chance and you have to buy at a premium, you only have a 30% reduction. So that works out in your favor. It's asymmetric. Overall, if you do that across 100 or so IPOs, you're going to come out about 30% better on your total long-term return relative to buying the IPO on day one. So that was a technique that I shared. I'm trying to come at the Coinbase from a different angle. I'm not a fundamental analyst, and I'm not necessarily a crypto expert, but I am a trader and a strategist. So I tried to share some analysis that gave folks something to think about related to Coinbase, but from a different angle.
I think that was absolutely the right approach to take, just because I think there's a lot of fear missing out. There was a lot of hype around Coinbase. And I think the way that you're explaining it and the type of way you would attack that, I think is something that people really should listen to, whether you're a retail or initial or a institutional investor, regardless. Now, right. The next one was an email, and this was not so much a question, but I pulled it because I wanted you to kind of respond to this individual's take on some of your analysis. Now, his name is Jeff, and I'll leave it at that because we won't give full names or anything like that. But he said, I'm writing in response to Adam O'Dell's analysis of IPOs that have moved up or down 50% after first listing. The analysis had a couple of weaknesses that should be addressed. First, with small data sets like this, using average results is misleading because a few high flyers can strongly skew the averages. Second, the data set includes only IPOs that have turned out to be highly successful performers. I understand that the assumption is for Coinbase, to also become highly successful, but that's not known at this point. A more balanced data set would include randomly selected IPOs from the same time frame that the presented IPOs were chosen. This would give a more representative picture of what an investor can expect when putting money into coin. Your thoughts on that? And I think there's some pretty compelling things to think about, but I want you to kind of respond to that.
Yeah, no, that's a mouthful, but in a great way, because these are very interesting and good questions. And he basically has one really good point and one point that I would take something of an objection to. So on the first point about the averages, first of all, it's not the size of the data set that creates that difference between using an average value and a skew based on large results. it's basically the skewness of the data set. So not to get wonky on you as a statistician, but basically if you have a positively skewed data set or distribution where you have, in layman's terms, that is basically a few stocks or a few data points that are extremely large, then your average of that data set or distribution is always going to be larger than the median. So if you think about income distribution in the United States, the billionaires are skew the average income up versus the median. And you basically get that in stocks. So the Googles and the Amazons and the Facebooks of the world who have gone on to do hundreds of thousands of percent from their IPO, they are going to skew the average higher. So it's not necessarily the size of the data set, although my data set was small. Basically for the analysis, go on moneymarkets.com and read it. But I just chose randomly 20 stocks out of the NASDAQ 100. I really should have chosen about 50 or even all 100 and done the analysis there. Nonetheless, I will say that to use the median doesn't really represent what you as an investor would earn. So if you had invested, the same dollar amount in each of those 20 IPOs that I did the analysis on, you would earn the average return of those. You would not earn the median. So even though that the average is skewed much more positively than the median, that's what you would earn as an investor. So I would take issue with that. In using the average. Now, the second part of this gentleman's question, as far as he basically is talking about survivorship bias, and he said that it's a biased analysis to only choose stocks that are currently trading in the market and not considering basically IPOs that listed and then were later delisted because the company went out of business or stopped trading. And basically that skews the results to look more positive. I mean, if you look at my data set on the article, on moneymarkets.com. I mean, in there is Facebook and Amazon and Google and Netflix. And so eBay, Intel, Microsoft. So basically not only the survivors, but the thrivers and the top dogs in that data set. And that was probably just partly a function because I chose the NASDAQ 100 and randomly selected 20 stocks out of the NASDAQ 100. The NASDAQ 100 are the 100 largest companies that trade on the NASDAQ exchange. So by, de facto, they are some of the most profitable and successful companies and the largest returning over a 15, 20, 30-year period since their IPO. So that point is absolutely right that Jeff made, survivorship bias. And it highlights, taking it back to Coin, it highlights that you have to make a judgment call. Is Coin going to do for Facebook what do for crypto what Facebook did for social, or what Amazon did for e-commerce, or what Google did for search? Or is Coinbase going to fizzle and it's going to be a lot of hype and it's going to go to zero 5 years from now? So the premise is that Coinbase is going to be one of those survivors and one of those big winners. And if that's the case, here's a tactic for how to buy into that, increase your returns relative to buying on day one. But if that premise does not hold, if Coinbase goes to zero because of all the competition and all the margin compression and things I've talked about, then that certainly buying at any price is still going to put you with a loser. So very fair analysis there.
Jeff, thank you very much for sending that question in to our email address, feedback@moneymarkets.com. One last thing before I let you go, Adam, and this comes from Joseph also, who emailed us. He said, hello, Adam. I've asked this to anyone who I believe is knowledgeable. And so apparently he thinks you're knowledgeable, which is a good sign to start. I have approximately half a Bitcoin I purchased when it was $8,000 per coin. I haven't done anything with it. Should I? Interesting question.
Yeah, interesting question. Well, first of all, congratulations. You're up like 5 or 6 fold. So you're, I guess, $4,000 turned into 20 some. So congratulations on that. It's not an insignificant sum of money, but it's not life changing. So I would put that qualifier on there. I'm not going to give you a specific answer to this question, but I will give you 2 ways of thinking about it that hopefully intelligently help this person asking this question answer it for themselves. And the first one would be are you going to try to trade Bitcoin, or are you going to be an investor in it for the long haul? If you're going to be an investor in it for the long haul, then the answer is hold it. Don't do anything. Sell it. It's hold on for dear life, right? So basically, like anything, but certainly to a pronounced degree, Bitcoin has boom and bust cycles. I can't tell you specifically where we are in the current cycle. I'd say probably more toward the boom side, more toward the toppy side than the bottom, obviously. That's not me calling the top or anything like that. So if you are a long-term investor, if you believe in the technology and the currency, and then hold on for dear life. Otherwise, if you're looking to trade it, I'll ask you this. would you buy Bitcoin at this price? So it's trading, I don't know, 55, 54,000 today. Would you buy it at this price? This gentleman bought it at 8,000. Would you buy it today at 55,000? If the answer is no, I wouldn't buy it here, then the answer to your current holding is you should sell it. Because basically, long story short, holding an investment that you bought at whatever price is more or less the same decision today as if you would buy it at this price. So if you don't feel comfortable buying Bitcoin at 55,000, then go ahead and sell it and wait for that pullback or that correction or that next bust cycle to reinvest. But again, that's if you want to trade Bitcoin. You're not going to make every call. You're not going to get every twist and turn. So know what you're getting into there. But that's not a specific answer, but hopefully that gets you closer to your right answer.
Those are certainly good ways of looking at not just an investment in Bitcoin, but in any investment. I think those are really good things to think about, something to chew on whenever you're deciding whether you want to buy or sell an equity, a commodity, or what have you. But Absolutely. Adam, that's all I have for you this week. It was a great conversation regarding Coinbase. Again, check out moneyandmarkets.com. You'll see Adam has 2 articles on Coinbase. You should read those if you haven't already. Plus, we did an Ask Adam Anything video last week about Coinbase, or a week or so ago on Coinbase during the IPO. We've talked about it. So a lot of information out there that we provided for you, not just on our YouTube channel, but also on moneyandmarkets.com, and definitely encourage you to check that out. But that's all I have for you this week, Adam.
Sounds good. Thanks a lot, Matt.
Thank you.